Does trying to prevent disaster actually court disaster? That's the argument in Foolproof, why safety can be dangerous and how danger makes us safe. And its author, Greg Ip, chief economics commentator at the Wall Street Journal, joins us now from Washington to make the case. Greg, it's good to see you again. Welcome back to TVO.
Hi, Stephen. Thanks for having me.
Let's start by quoting some of you back to you. Here's from Foolproof. The Titanic's captain should have responded to warnings of ice in the North Atlantic. The big banks and credit rating agencies were appallingly short-sighted about risks involved in mortgage-backed securities. And the National Football League downplayed the threat to its players' health from repeated concussions for far too long. If it were only bad behavior at work, the answer would be straightforward. Pass more rules and enforce them vigorously. But by seeing these events solely as a morality play, we're going to miss something very important and make it harder to solve them. Oftentimes, it's not the nefarious stuff that does us in, it's the well-intentioned. And that's where I want to pick up, Greg. You say not the nefarious stuff that does us in, but the well-intentioned. That sounds counterintuitive. So what do you mean by that?
What I basically mean, and actually I think that if you stop and think about this for a moment, it automatically makes some sense, which is that if you take so many steps to make yourself safe or make the world a safer place, and it actually has a desired effect, if people feel safer, they're likely to let down their guard and take more risks. And this will sometimes have unintended consequences. It may encourage risk-taking, which brings on different types of disasters, or it may cause the risks that you face to change shape and migrate elsewhere. Let me begin with a very simple example, which is antibiotics, which have been around since the 1940s and have been lifesavers for dealing with all sorts of diseases, from tuberculosis to blood and skin infections. But very soon after they were invented, they started bringing a scourge of their own, which was resistance. And the more antibiotics spread, the more resistance spread. And so now you have a situation where people will routinely ask for antibiotics for themselves or their children. And this has the effect of actually encouraging the spread of resistant pests and actually making the antibiotics much less effective. And I make the argument in my book that something similar happened in the global financial system as a whole. Perhaps in my view, the main reason the crisis and recession of the late 2000s was so bad was because we'd had 25 years of relative peace before that, and that wasn't a coincidence. Central banks had managed to tame inflation. They'd made recessions much milder. They managed to contain a lot of financial crises. And on Wall Street, people were devising all these derivatives and other innovations that were meant to spread and reduce risk. And all this stuff, I think, collectively encouraged people to take more risk until it created this highly leveraged, highly fragile system that was ready for collapse.
So in effect, what you're saying is that the relatively stable economic conditions that we enjoyed for a few decades before the Great Recession of 2008 actually in some perverse way helped lead to the Great Recession?
Yeah, in fact, there was an economist named Hyman Minsky who died back in 1996. Too early to see his predictions come true, but he used to have a saying, stability creates instability. And what he meant by that was precisely that when the economy is stable for a long time, it encourages people to borrow more. And at first that borrowing is for legitimate purposes. Then they start borrowing just to buy assets at ever-inflated prices. And then eventually they're borrowing just to pay the interest on the debts that they took out the year before. And that's kind of like a sequence that we went through with perfect precision in this last cycle. The longer it seems that you go without anything bad happening, the more you're lulled into thinking that you've actually identified and taken care of all the bad things that could possibly happen. In fact, the risks are just multiplying away where you don't see them.
So in effect, it's better to let a bank fail every now and then, just as a sort of cautionary tale to make everybody else behave well? Is that what you're saying?
Well, that's kind of the logic of it, isn't it? If you save every single bank from failing and people become convinced that they will be never allowed to fail, they will lend them money too cheaply and those banks will take excessive risks. But this is not an easy question to actually put into practice. And I've talked to enough people who are in a very unpleasant situation of having to decide whether a bank should be allowed to fail to know that this is not easy, because it's never a simple matter of, oh, just let this one fail and everything will be fine and the people who took bad risks will learn their lessons. You never know if that's going to trigger a run on other banks, perhaps healthy banks and companies that look like banks but aren't banks, and cause a crisis that's much larger. So I wouldn't claim that I actually have the answer here, and the solution is therefore to always let a bank fail. It's difficult to say, but I think we need legal systems in place that actually make it difficult for a bank to become so leveraged and so large and so critical that its failure triggers a contagion across an entire financial system. You need basically laws in place that limit the complexity of institutions, that require them to hold enough capital so that the mistakes don't bring them down. But if they do fail, it doesn't trigger this chain reaction. But Steve, I'm not going to sit here and claim that I've got the perfect answer.
No, I don't hear you saying that, so don't worry about that. But I must confess, I read the chapter of your book that was dealing with hockey and football very carefully, because I don't mind saying I'm not an expert on Dodd-Frank, but I am an expert on hockey. And I played hockey every week for the last 35 years with the same group of losers. And what you said was absolutely true. As soon as I put a cage on to protect my face, the high sticking has been unprecedented, and guys are just a whole lot less careful with the way they play the game than they did before. But Greg, I got to tell you, are you saying the result of that policy then is to take all the face masks off so that people will be more careful with the way they wield their sticks?
So this is a very complicated question. I'm glad you brought it up, because I really wrestled with this as I was researching it. And so you're absolutely right. When people studied the introduction of mandatory helmets in the NHL, they did find that there was a rise in certain types of injuries. Now, other types of injuries actually did go down. So what you seem to have was that the presence of the helmets and then later masks seemed to cause certain types of injuries, like eye injuries, to go down, but it may have changed the behavior of the players to cause other types of injuries to go up. And something similar happened with football helmets. Hard football helmets were introduced in the 1940s, and what coaches learned to do once their players had these hard helmets was to spear each other. Look, your head is now this battering ram, and you can take another player down more easily with your head than you can with your arms. What they discovered, though, was that while these helmets reduced certain injuries like fractured skulls and teeth injuries, is that it was causing an increase in spinal injuries, broken necks, because of the pressure these kids were putting on their spinal columns when they would spear each other. Eventually, both the NCAA and the NFL outlawed spearing, but we still have this concussion problem in the NFL, and it is primarily a result of helmet-to-helmet hits. And despite all the efforts by the NFL and the rest to crack down on illegal hits, there still seems to be something about the presence of the helmets and the nature of the game that it's hard to stop the players from using the protection of their head as a weapon. And so, when you look, I'm not a professional sports person, and so I don't want to tell the leagues how to do this. It's not clear to me that taking the helmets away will actually leave you better off, because you might just end up, as I said, with more skull fractures and some other type of injury. And a lot of it has to do with, well, what do people who watch the game or play the game want from it? In both hockey and football, the players have been just getting steadily bigger over the last 30 years. They hit each other harder. People, and that's no accident, because people want to watch a thrilling game. They want to see these incredibly athletic, strong players play hard and hit hard. And so it raises the interesting question, well, is this the kind of spectacle that professional sports are kind of made of? Now, you compare football to rugby. In rugby, they don't wear hard helmets, not really allowed. And they're also not allowed to hit each other with their heads. That's not what's involved in tackling in rugby. They're supposed to wrap their hands around the other player and then drag them down. We don't have apples-to-apples statistics, but it does appear to be the case that serious head injuries and concussions, while they're a problem in rugby, are not as prevalent a problem as in football. The truth of the matter is, we don't know what would happen if we were to take away the football helmets. It's quite possible, or the hockey helmets. It is possible that certain things would get better and other things wouldn't. I think the lesson I'm trying to tell in my book here is that there are always the unexpected and the unintended consequences when you try to make something safer.
The unintended consequences are certainly something that you've put your finger on, and I know that, for example, in my own case, I put a cage on after I got hit by a slap shot in the face, and I thought, I'm not going to go through that again. That's not pleasant. Having said that, taking all the helmets off, I mean, I was old enough to remember when Bill Masterton from the Minnesota North Stars fell on his head on the ice and died. And we can't have hockey players dying from playing the game. So do you understand? I mean, I don't know whether you know where that sweet spot is between where intervention outweighs the risk versus the benefit. Do we know?
Well, I think the one saving grace of this is that there's a tremendous amount of research being done, both in government laboratories, private laboratories, and universities across the country that's investigating these questions. And that brings me to the issue of automobiles, for example. In the 70s, as mandatory seatbelt laws became common in places like Ontario and Australia, there were some economists who were arguing this was leading to a change in the way people drove. They said that people with seatbelts, because they worried less about their own harm, they drove faster, and the result was that there were more pedestrians being killed. And some early research seems to suggest this was true. But later on, more careful research suggested, no, this wasn't true. It was the case that seatbelts were not reducing accidents or deaths as much as expected, but they still were reducing deaths, and they were not leading to more pedestrian deaths. However, when those same researchers studied the effect of adding anti-lock brakes to cars, they actually found that these did not seem to have any positive effect on accident incidents. There seemed to be something about having anti-lock brakes that made drivers drive differently. In a couple of studies, it seemed to be that they had fewer frontal collisions, but more rear-end collisions because they were braking harder. So this was a case where the introduction of a new safety device, upon close examination, did not seem to have the promised benefits. So I guess I would say that would be my answer to anybody trying to figure out what to do, is that do these sort of controlled experiments and see what kind of effect they have. And it turns out that you'll find that some interventions work and others don't.
In fact, I think I read in your book that even with anti-lock brakes, people still pump their brakes when they need to come to a quick stop, which of course defies the logic behind anti-lock brakes. They're supposed to do the pumping for you.
Well, that's the thing, sometimes some of these devices are just so complicated to figure out, it turns out that they just don't deliver the promised benefits.
There's a chapter of your book that's called "Now is the Time to Panic." So normally in life, panic is not a good thing, but maybe since you're here, you could tell us when, in your view, it actually is a good time to panic.
Okay, well, a little bit of backstory there. I was actually obviously being a little bit mischievous with that headline. I'm not saying that panic is normally a good thing. I remember many years ago, I was working at the Globe and Mail, and there was one of the periodic financial meltdowns going on. And I spoke to a source who said, "We're advising all our clients to panic." And it was a moment I remember because it was very tongue-in-cheek and very funny. But what I'm getting at in that piece is that when I talk about panic in my book, I'm talking about a reaction, which is a reaction to danger, which is disproportionate to the danger that is really represented. I'll give you one example. There was a scare back in the 1980s about a chemical that was sprayed on apples called LR. There was a 60 Minutes episode that said this was a very dangerous cancer-causing element. And there was a very big reaction across the country as people threw out their apples, wouldn't drink apple juice, wouldn't eat applesauce. People were very, very worried about the health risks here. And this was a complete overreaction, because even the research that suggested that this chemical was bad for your health said that it would take years and years and years for it to have any effect, and you would have to truly consume staggering quantities of apples to feel this. But what people who heard that weren't thinking in terms of percentages and probabilities. They were thinking, I can eat that apple or drink that apple juice and take a risk of cancer, or I can not eat the apple or drink the apple juice and not take that chance. When changing your behavior is relatively costless and you don't have a good concept of just how risky that behavior is, what I mean by panic is it's easier just not to do that behavior. And so you see this phenomenon often, especially in the case of food panics, where a report of, for example, spinach or tomatoes being infected with something will cause consumption of those products across the country to plummet. And it can sometimes take years for that to recover. We saw that in the financial crisis, where investors or lenders or depositors told that their bank or their money market fund had some toxic mortgage securities, weren't really sure which ones had the toxic mortgage securities, and found it easier just to avoid all of them. So that in some sense, it was rational to, quote, panic, unquote. In other words, I don't know where the toxic stuff is, I'm just going to avoid all of it. But the aggregate response to society of that was much more damaging than the original source of that threat was in the first place.
Mm-hmm. Let's stay with banking for a second here. You have a metaphor in the book of comparing the prevention of forest fires to an activist central banker. How are those two activities similar in your view?
Well, I trace both the creation of the Federal Reserve and the U.S. Forest Service back a century to what we call in the United States progressive era, when there was a belief that if you used the best of knowledge and you had an intelligent government, you could control the natural instability of either the economy or the natural environment. So in the forest area, they said, let's put all the forest fires out. They're very damaging and they cause a lot of economic waste. Well, it took a number of decades, but ecologists now know that that's actually not good for forests. They need fires from time to time. Fires tend to obliterate all the fuel that's building up on the forest floor, and they tend to leave only the strong trees to survive. And if you go long periods of suppressing forest fires, you allow actually the forest to get denser, less healthy, and then when a fire does start, there's more fuel, lying around. Now, what I say in the case of the economy is that if you try to suppress the risk and uncertainty of the economy for a long time to persuade people that you really have, in some sense, defeated the business cycle, it'll never be a bad recession or crisis again, people's behavior will change and they will take on more risks. They will pay higher prices for houses and borrow more money to pay those prices. And it's an entirely logical thing to do if you see by just your own experience that big recessions that send housing prices down just don't happen any longer. But it's in some sense a false impression because your economies are always evolving and our attitudes about risk are always evolving. And so in the economy, like in the forests, too long with this artificial stability can create the conditions for something more damaging to come along.
Let's do one more of these concrete examples. I really found the chapter fascinating where you compare flying in a plane to driving in a car. And in some respects, you say, if I've got this right, you say that forcing the airlines to take on even more safety features than they need to in order just to make people feel safer actually will have the exact opposite influence, because if you price flying out of people's sweet spot, they'll end up driving more, and that's more likely to get them killed than flying. So what do we do about all that?
Okay, well, let's talk about two specific examples. We know, for example, that it's safer to fly on a long trip than to drive. That's been well established in the data. After 9/11, a lot of people didn't want to fly because they thought it was dangerous or inconvenient. And we actually have seen studies that suggest the number of deaths on the highways went up by more than the number of people who died on those airplanes as a result. So that was people sort of getting their risk priorities confused. Similarly, there have been calls from time to time that children younger than 2 who can now travel on their parents' laps on airplanes should have their own seat because it's safer. That is true. It is safer for a child to have its own seat. But the cost of buying that extra seat means some families will drive instead of fly. And people have studied this, say that you would actually have requiring seats for small children on airplanes would actually cost more lives on the highways than it would save in the airplanes. But Steve, I actually want to make a different point, but it's also related to the aircraft situation. Because stepping back and taking a larger picture, I think it is really phenomenal how safe it is to fly. I mean, I don't know about you, but when I look at a little silver tube flying in the stratosphere in air that's like minus 50 degrees Celsius, that seems like a kind of a dangerous enterprise. And yet those planes take off and land safely millions of times a day. I think it's just amazing that it's as safe to fly as it is. And what I believe has happened in aviation is that we are so aware of how dangerous it is, and so many people are so concerned and so sensitized to the accidents that get so much news attention, is that the industry, the airlines, the airplane makers, the regulators have had to go overboard to make it exceptionally safe. And so in my book, I asked the question, what can we learn from aviation and so that we can make other things safer? It's to be a little bit scared all the time, to always think about what can go wrong and to try and change your own behavior accordingly. I find it amazing that when I'm on an airplane and they say this flight's been delayed by an hour and a half because there's some very small safety issue we have to look into, I never see anybody on the airplane get upset. And I think it's because they're used to it and because there's no way do they want to take off if even there's a microscopic possibility that their safety has been compromised. And that comes from the awareness and the belief that they simply don't want to take on those risks. That's what I think is the interesting lesson to draw from aviation.
So let's finish up on this. What do you think policymakers should keep in mind when they are trying to mitigate risk over a wide variety of different areas?
Well, a couple things. First of all, there's no simple answer here. There's many things governments do that are very, very effective at making us safer. You know, compulsory vaccination, cleaning our drinking water, basic protections for consumers, basic protections in the areas of safety. But all people passing rules, and I don't just mean governments, but even industry and companies and we as consumers, always need to be thinking about the unintended consequences and the possible changes to our behavior. If you introduce that antibiotic, will it produce resistance? If you require people on bicycles to wear helmets, will they ride their bicycles less and have worse health as a result? Always think about those consequences. Look to the research, like the example I was giving about earlier about the safety belts and the anti-lock brakes. We are gifted with a lot of great researchers who can actually help drill down and yield us some interesting answers to these questions. And finally, I would say that do not believe that we can have a world that's completely absent crises and absent disaster. I think that we all know that, and I don't think governments go around promising us this world, but sometimes we behave like we really should have a world that never has any disasters and never has any crises. And I think that we overreact sometimes. A few terrorist attacks have created calls in this country to keep all people of certain faiths and certain countries out of this country. That's a panic reaction, and it could end up actually doing more harm than good by denying refuge to people who could actually make a contribution to our society and feeding the narrative of terrorists who want to do us harm. Another example is that financial crises have been around as long as there's been finance. If you want to get rid of all crises, you'll have to get rid of finance. But if you get rid of finance, you get rid of the risk-taking and the investment that finance makes possible, and then your economies don't grow. So the message that I've come to at the end of all this is that there's a question of balance here, is to try and get the balance right between safety and risk-taking on the other. And it's not easily done, but I think if we approach this question without ideology and with a lot of faith in the tools we have to do the costs and the benefits, we can get the balance right.
It's a fascinating read, and I'm really glad you wrote the book. Greg Yip, thanks so much for writing Foolproof, Why Safety Can Be Dangerous and How Danger Makes Us Safe. Take care, my friend. We'll talk to you again soon.
Thank you, Steve.
Help TVO create a better world through the power of learning. Visit supporttvo.org and make a tax-deductible donation today.